Welcome to the Pulver Report. Let's get started. First things first, we understand there's risk in trading. Please don't always use trade capital only. You know the deal there. Social media, verified Twitter account at Chris Pulver, and this channel, youtube.com/Chris Pulver. Also my Discord channel. I'll post that in the group chat in just a moment. Let's jump to the markets opening bell. We had a slight gap higher on the SPY 435, and this week it's actually been a pretty decent week. Just kind of started off, if we had indecision, we positioned for that. If we had a breakout, we positioned for that. And then we had a nice intraday move yesterday that we took a lot of profit on. So net for the week, it's going to be a positive week. Probably today at the top of the hour when I start my equities on demand class. As long as we're above 432, let's see what that's trading for. I know full profit's going to be by the end of the day. So, I don't know. I mean, I can watch intraday. Let me see if I can get up my charts and look at some levels here. So let me see where the big levels are for today. Starting at 435, if it's, a $3 to $4 move to the downside, that puts us right on 431. We should still be able to claw maybe a break even on those SPY credit spreads. And we also have the 20th and the 27th. We've got a 430 or a 431 by 430. We did a couple of credit spreads there as well. See if we can get the breakout to the upside or the downside. So basically, if price is above 432 or below 422, we make money on the SPY as well. So let me take a look at the big levels. So biggest level today, contract size on my liquidity pockets and gamma squeeze levels are not huge. Let me see if anything's getting adjusted. So I've got 430 as a level today. And we pretty much opened at 436. We could, it was the same thing as yesterday. 440 and 430, and we're sitting right in the middle at 435.50. So it's kind of a toss-up day to see where the direction goes. We had a slight gap higher. It wouldn't be surprising. Let's go to the smaller time frame here. If we pull back and fill the gap, you can see that green box in my charts. So if we come back in and fill the gap and then bounce, that might be a short-term opportunity to look long, test the high. That'd be an intraday low around 434. We might be able to push up towards 438 or 440. That's still a $6 move on the day, which is above the normal. There's not a lot of driving news today like we had this week, Wednesday, Thursday, but if we have big news like PPI data this week and CPI data, it might be enough to give the market a reason to move. So anyway, to kind of kick things off initially, it looks like the bulls are in control of some volume sentiment, and I would look to see if this just stays right here and then starts to head higher, try to get to the high. 440 is a big level for today. And if it looks like we have a pretty straightforward move, we might want to jump on that. But like I said, as long as we're above 432, I have about 55 cents worth of credit per contract coming my way as well. So I don't have to force a zero DTE trade today. We took a good one yesterday. It was combination of I had a straddle going into Friday, and I was able to close it yesterday, and then we had a nice intraday long put. So that was right in here for equities on demand. And through my Delta Trader strategy, and right here. So this is a spread, and I have 20. It was 20 cents on a dollar spread and 35 cents on a $2 spread. So like I said, between those two, 55 cents net profit as long as price stays above 432 today. And I'm going to look and see if I can protect profit as a whole. So I can close this down for 0, and that's actually going to serve as profit. Most of my Delta Trader trades have been debits. Every now and then we'll throw in some spreads when we want to go out more than a few days. So we took this trade. I think I took this trade on Tuesday and had a Friday expiration. So we'll talk about that. But yesterday was solid. We did a straddle, 438 long call, 434 long put, and the price sold off really nicely yesterday towards 431. And I was able to close out some profit. I think this is trading up as high as maybe $3.50. And, it was fine. I certainly, left a little bit on the table. I could have managed it using this 1-minute time frame right here, where price went all the way down towards 431. I think I ended up closing out once we started to break this low around 432, which I just look left right over here. In this previous low, once we started to come down into this area at 432 and lower, I was good taking profit, just seeing that I didn't have to sit on this position through the rest of the week. So the straddle was profitable. The long put was really profitable. Paid 52 cents on a long put, and this at one point was paying up to like $2.50. So I certainly left a little bit of money on the table, but I'm happy overall, grabbing about a dollar, 70, $1.95. I took off partial positions because I have multiple contracts, but really happy net on the week. And if I can grab another 55 cents, that'll cover my butterfly spread. And, I'll take the 33-cent loss, add in 50 cents of profit here, and then take my, $2.40 of profit there. So all in all, it's a pretty good week for stocks and options. So keep an eye on that. Let's go to the Qs really quickly. And let me log into YouTube and say good morning to everybody. Hope you all had a good week. We had a good week in trading. I mean, kind of all around. The Forex market, we closed out for about 531 pips in dollar crosses. We'll take a look and see how the robots are doing. I think yesterday the robots were up quite a bit. I had all my robots in profit yesterday. Perfect Storm Pro, Pockets Pattern Pro. I'm trying to think any other ones. Equalizer Pro. So all good there. Good morning, Chris. Good morning, Denise. John, good morning. Donna, good morning. Do you have a winning scalping strategy, John? Yes. That's such a general question. I mean, there's so many different ways to tackle these markets. So what market are you trading? Are you trading Forex? Um, I don't I don't love scalping Forex, to be honest. I did it. I think there's look, I can teach it. There's ways to do it. I think my biggest hesitation on forex trading is it's a 24-hour market, and I mean you can sit your butt down on a computer for 8 hours a day and not be guaranteed to get a good trade. So that's what kind of turned me off the day trading when I'd come to the market, be looking to trade in a 2 to 3 hour window, and sometimes even a 6 to 8 hour window. And some days it feels like, why did I trade? I just traded a bunch of noise and I didn't have any alignments. So as long as you're focused on, do you have a decent 1 hour alignment, then go down to like a 30 or 15-minute chart, and then you go down to your smaller time frames, look for like a 5 and a 1 minute entry. It's really easy to align. Let's make sure things are aligned. That's all. Make sure you're trading some currency pairs that have decent volatility. That's all. Morning, Gary. Happy Friday, traders. All right, and Friday the 13th, we'll see if the market's going to do anything wild and crazy. Qs. So as far as the channel goes, again, are we going to have a big sell-off today? I don't know. We do have, let me see if we have some gaps on the Qs actually. Looks like we do not. So nothing immediate to the downside on the Qs. That gap yesterday was filled. That was a pretty solid sell-off. 373 down to 367. About a $6 sell-off. And then on the SPYs, I think it was like kind of close to the same thing. I mean, I gotta be honest. Like, I'm not impressed with the Qs. Their implied volatility is really the same as the SPY, and you're still paying more for that. So, highs yesterday around 437, lows at 431. I mean, you had all of a $6 move in the SPY as well. So, I don't know. I'm not convinced that I want to trade the Qs that often when the SPY is a little bit cheaper and you're getting just the same amount of movement. So, it is what it is. But anyway, if we're above 432, that's going to be a nice little win. I'll eat the butterfly spread, but again, don't be too alarmed if the market comes back in and fills the gap today around 434. Like I said, big levels today. If the bulls, I'll say that if the bulls need to get above 436, if the bulls can get above 436 and stay there, then I think there's room to kind of drift and hang here for the day. 439 to 440 is going to be the big magnet if there is one today. So, this is where we had the close yesterday. We gapped higher. This would be a $6 move if we get to 440 today. I'm not saying that it can't be done, but, the average is around $4, $4.50. Let me see if I have my daily. Yeah, right there. So that's the weekly at 1095, which we surpassed that in like 2 days this week. If I change this to the daily, the daily is really, oh, that's the 10-day. Okay, that's a little bit more volatile. Let's go 14. Probably slightly less. 522. Wow. So I mean, your average trading range for the SPY is 522. Man, this thing is cranking. All right, so if we stay above 436, then look into the upside towards 437. Next big level that I see is 439 to 440. That could be the pull for today's price. So I hope it stays bullish because that means we get paid on some credit spreads, and that just helps us wrap up a nice solid week of trading. Currency-wise, here's Flex Trading Room. And I don't want to overlook the fact that I took losses on JPY crosses. We got filled on little flash move from October 3rd. I did take, I think it was Euro, Swiss yen, pound yen. I got stopped out on. Looking at the yens this morning, I also am not loving the fact that the Swiss is the strongest currency pair. But that's fine. I mean, we'll just stay patient for a lot of pullbacks and we'll get them. And I'm not afraid. I mean, it's just like, all right, whatever. But anyway, I don't like to see this big separation between the Swiss and the Euro. However, if you remember what we talked about for many, many months now on the Euro Swiss, if we're coming back into double bottom around 94, 94.50, that might be posturing that setup. So Japanese yen's a little bit stronger, but we got popped on that flash move. We got filled, number one, on sell stops, and then just quickly snap back and end up getting stopped out. So pip wise, I mean, I lost on the yens, and we closed out for dollar profits this week. But dollar wise, as far as making money, I was net positive on all of that. And then robots did pretty well this week. I'm going to check those really quickly. So Perfect Storm Pro, 184 pips this week. The original Perfect Storm is 245 pips this week. Pockets Pattern Pro is up 154 this week. And Equalizer, uh, 1,870 pips this week. Oh, baby. So let me throw a quick calculator on that. So 1870 on Equalizer. And that's another 43 since I have it going both directions. And then Pockets was 154. And Perfect Storm was 245. And then the Perfect Storm Pro was 184. So 24.96 in robot profits this week. I'll add this in. So that's just a copy here. Take this down to my trade log, add this in. And then let's see what type of comments we have. Do you have a Forex and option subscription together? I do have. You can bundle the trading room. Yep, I'll show you that in just a minute. That's Barbara asking that question. Yeah, so in my Discord channel, I have a trial period where you can get in my flex room, which is Forex trading Tuesday, Wednesday, Thursday, and then my equities on demand trading room, which is Monday through Friday. So if you'd like to trade both of those asset classes, you can do that with my trading rooms. And I put it, they're essentially back to back. Monday through Friday, 10 a.m. Eastern time is our equities on demand class, and then Tuesday, Wednesday, Thursday is Forex. We're doing that at 8:30 a.m. Eastern time. And then the reason I'm not doing flex trading room every day of the week is because Mondays and Fridays I do this YouTube session, so we can kind of have a weekly outlook and a weekly recap. And Forex is not day to day. Forex is building positions, swing trades, a little bit higher time frames, and I do that because it's a 24-hour market. I'm not looking to day trade, in a 3 to 4 hour window because I've done it. It's frustrating. I feel like I force trades and I don't want to do that. So anyway, all right, let me add my profits here. So Perfect Storm Pro was 184. Perfect Storm Original was 245. So 245 and then 184. Pockets was 154. And then Equalizer Pro was 43 on the buy side. It was 44 actually. 44 plus, and it was like 1800 on the other one. 1870 plus 1870. So 1914. All right, and that total plus 154 and 245 and 184. So 24.97. Not a bad week for old robots. Is that right? 24.97. Yep. So not too shabby. So we keep rocking and rolling. Let me bring up the Discord channel, and I'll post this in the YouTube chat as well. So I did add a thread to my Discord channel, and this includes any and all education. So if you want to take a look at this again, there is no pressure from me on any of this. I'm just simply showing, look, I've been in this market for a long time. I've traded forex since 2007. I've been in stocks since 2000. I've been active options since 2015. I'm in cryptos as well. It's more of a buy and hold in cryptos and is what it is, just for some 1 to 3 to 5% allocation. But pretty much every course that I service, teach, have done, there's some of them are, there's updates like Right Trader Max, and then there's the original one. There's a price difference between those two. A pro version or max version is the latest full course with all the strategy guide, the videos, and the automation. A lot of these are automated classes, or not automated classes, but automated strategies included with the education. So to Barbara's question, I put this at the very top. So my Flex Trading Room trial for 27 bucks, and this is supposed to be, I'm going to hang on, I got to change this link. This says EOD Trading Room. Let me see what this is. I don't know why it listed something different. Okay, this is Equities on Demand. So this is a stocks and options trading room. That's correct. But for some reason, okay, just check this out. So you can see here it says Flex Trading Room, and here it says Equities on Demand, or EOD. So the links are correct. I just don't know why it says that. That's incorrect. But this is, I'm checking that off. That's correct. So it's a $27 trial, and check it out. It's, you can come and trade with me every single day. I know a lot of traders love that. It keeps me in the market, keeps me consistent, keeps me objective, and we get to bounce a lot of ideas off each other. It's a great community of traders. And then I've got all these other classes as well. This is an old standby. I did this. This was one of my most thorough, most comprehensive courses that I ever did. Basically, it's like, look, this is how I trade. When I was having a lot of success in the forex market and just trading markets in general, big picture stuff. There's a video series here that I just launched through my Vimeo site. I'll visit the site right here to show you. So it is mapped out. There's a bonus with a conference that I did. Just I get this question all the time, right? What's your favorite stuff to trade? It's in this video series. Support and resistance, trend lines, market mapping, structure, shapes and formations, all these different patterns. How do you trade a crown? How do you trade a head and shoulders? How do you trade a double top, double bottom, rising, falling wedges, cup and handle, bull and bear flags? I just want you to take a look. Like, these are pretty long modules, right? Module 1, support resistance, it's an hour and 41 minutes. Okay, I mean, there's probably 15 hours of instruction in this. And I know that's a lot, and I'm not saying that to overwhelm anybody. But as far as the value in this, it's like I spent months and months and months putting this video series together. And then this is a bonus, just a live conference that I did. I think this is a Houston conference, but it was a lot of fun. And anyway, so just if you end up getting the Survival Trader series, that is yours forever. It's just you can stream it anytime. And then the other ones, there's access. You're going to get trading access to charts. You're going to get educational videos through this thing called Thought Industries, and it's an online university. So again, there's no pressure for me. If you have any questions on this stuff, let me know. Right? So in the free group chat for my Discord channel, let me share that right now. But if you have any questions on the education, I'm happy to add a quick video, and I can post this in the group chat and just highlight one of these systems. We can do that over the next couple weeks. Is, hey, I'm just going to do a quick 5 or 10 minute video. Let's give a highlight to the Flex Trading Room. Let's give a highlight to Equities on Demand. Let's give a highlight to any of these systems. So in the coming weeks, I can just roll out videos like that and answer any questions. But again, that's why the free group chat is there. So if you have questions, obviously type it in. So I'm going to create an invite. This one will not expire. Copy and paste this in the chat right here. So this is my Discord channel link. And I will say this, that this has popped up for whatever reason. If you're in this session, usually when you click on that link and you join, if you're not already in the Discord channel, you can join it, and it usually works right away. For whatever reason, when I close the session down, if you're watching this recording and you click on the link and it doesn't work, just make sure you leave a comment for me, and I can reply with an updated link. But the link shouldn't expire. It should be good. I just want to make sure that if you want to join the Discord channel, you can. Okay. All right. So that little housekeeping stuff's out of the way. Close that down. Good pips for the week. Good structure for the week. Like I said, SPY wise, if we stay above 436, that's good. The gravitational pull today to the upside would be 439 to 440. All in all, I mean, if I close out for this would be 55 cents profit, I'd take the loss at 33 cents. I'm going to assume that I do that today. So let's say that we take full profit on credit spreads. So I would be down 33 cents on a butterfly. I'd be up 55 cents on spreads, and then $1.23 and $1.18 with short-term plays yesterday. That's 263 per contract. I mean, if you're a one contract trader, you're making 263 bucks this week in stocks and options. For me, it's more like that. Oops, that's a little bit big. 2.63 times that. Oops, you get it. 2.63 times that. That's more of the week. So not a bad week. And we'll see how the rest of the day plays out. But if there's something I like short term, I'll be after it. Okay. Good. Yep. Thanks, Catherine. I appreciate that. Barbara, you good on that? All that through the Discord channel? Yeah, I think you're good. So you can check that out on the Discord channel. And thanks, Terry. Nice to see you. All right, let's jump to the charts. So 436, watch for that pull towards 438 or 439, 440. Going into the Qs, let's take a look at the bigger picture. This is what I am looking for. I mean, right now, remember, I mean, it's only the middle of October. There still could be some indecision ahead. But I thought about this yesterday, right? I mean, what's the next big catalyst? I mean, we have seen PPI and CPI print higher than expected this week. That's probably not a great sign for the bulls in the stock market. But there's a lot of things that the market can ignore right now if it wants to. So I would say that there's two possibilities, and I'm not doing this to be like neutral, but I'm saying that look, I mean, right now this could be indecision, and this market could head back lower with more fear, more uncertainty, right? And technically, it would make a lot of sense. Just like we did in 2022, we had this nice kind of obedient correction where the market just stayed in a channel. Okay. Now, the flip side of that would be, okay, we have data that's showing higher prices. We have data that's showing higher inflation, stickier inflation. Oh my gosh, what's going to happen? Look, if the Fed probability does not change, and November 1st, which isn't that far away, by the way, November 1st rate decision is still a pause. If the market is going to interpret that as a dovish Fed, this market might do whatever it can to rip higher. Remember, it's Q4. Q4 going into, October, November. November is, a couple weeks of trading, and then we get into holiday time. Holiday time from late November into December is essentially a drift. There's really never an opposing force. So if the market starts in motion to the upside through late October, November, and we get through that Fed rate decision with a bullish move, that momentum may continue to the end of the year, right? So, like I said, this is kind of what I'm looking at is I don't know what we're going to do, but if we start looking at, the next couple of weeks, I mean, a straddle seems pretty logical as long as it's not overly expensive. But if we break this low or we break this high, we'll price that out next week. Okay. If we start to break higher, I mean, could we take some credit spreads in here and get some exposure? Could we take some credit spreads here and get some exposure? Yes and yes. Right? I mean, if we stay up here for the next 60 to 90 days and we're buying this breakout, we can make a lot of money there. We can have some income over the next, 6 to 8 weeks. Okay. So I don't know. I mean, it's like there's a seasonality to it. I think the Fed's hand has been played for the most part. I don't think they're trying to throw any surprises into the market at this time. The one thing we also have to keep an eye on is the 10-year note. Okay. I mean, we essentially hit kind of equal highs this week at 4.88. We're just shy of 5%. We saw some of the lower ones like the 2-year. The 2-year popped up above 5% for the first time in a long time. I mean, this would have been, I don't know, a decade plus ago, if not longer. I mean, '06. Wow, that's way long ago. We're talking '06, '07 was the last time that the 2-year yield was up to 5+%. Okay, and I know that there are expectations like, oh, the Fed's going to start cutting rates. Look, if the Fed's not cutting rates until summer of next year, I don't know that this, I don't know. Maybe we might enter a period like that, right? We might have some sideways movement and the markets, I don't know, calling the bluff, I guess, but it's like, I don't know how technical this has to be, right? This is not a currency pair. This is not a crypto. This is not a stock. This is macro and fundamental. I'd say that the Fed doesn't want to raise rates anymore. because what happens if they do? If the Fed raises rates more and services its debt at the current percentages, we are about to be public debt is going to be the number one line item on the budget. It's going to surpass Social Security, Medicare, Medicaid. It's going to surpass military, just because we're sitting at 5.25, 5.5%. So the Fed doesn't want to raise rates. What they want to do is they want to talk everything down. That's what they want to do. They want to jawbone. They want to use moral suasion. They want to talk everything down. And it's like, okay, so if they want to talk everything down, probably the last thing they want to see is the market rip higher. Not that the market represents the economy. That's one thing we clearly learned in 2020, in 2021, and in 2022. The market does not reflect the economy. Okay? So this market could still rip to the upside, and we could have divergence here. We could have a beautiful double top, but we could get there first and then set up a big ominous topping pattern to then come back down. And I think, give this a year or two. Would anybody be super surprised that this is where we're at? I mean, if over, I mean, all the wild and crazy price action we saw since 2020, wouldn't it make sense that it's like the world has been crazy for 3 years? So to me, it would make sense that it's like, okay, we had our little stimulus bazooka and we did wild and crazy radical monetary policy for, cutting rates to zero and then raising rates to 5+%. And then we had a correction and tech is dead and then tech comes back. We've got AI and hype. It's like we have been in these like very aggressive rotational boom and bust cycles. And so I wouldn't be terribly surprised if when the dust settles, we're looking at like 3 to 4 years of trading and we're nowhere better than where we started, right? Like this would be the reality. So obviously there's going to be a lot of stuff we have to wait for and position for and trade accordingly. But it's like, I just think that this is our job. I mean, I wish I could say like, oh, this is easy. Let's just be crazy bullish, but I'm not there yet. I think the market is able to shrug off, a lot of bad stuff right now. It's able to shrug off a Middle East conflict going on. It's able to shrug off where the Fed's at. It's able to shrug off maybe 1/10 of 1% higher inflation. Okay. But if we rally, I think we're still somewhat capped to the upside. We might hit 500 just because it's a big milestone. But if we end up setting up a bearish pattern, then look the heck out below, because that would be a very ominous sign. This was a crown pattern, and it wasn't a surprise that we ended up going lower. You know, so point is, there's a lot ahead that we're going to have to figure out, and it's important that we're not taking crazy risks, and there's no certainties, right? So trade with good risk management, diversify. And when I say diversify, it's like, I don't mean trading hundreds of stocks. I mean, I'm diversified over about 10 positions stock wise as far as ownership, but I have protection to the downside. I'm trading the indexes just to see what the broader market's doing with risk on, risk off. We're watching the dollar, right? Not the DFXY, just the DXY. We're watching the dollar, which, by the way, this week, so, I mean, yesterday's dollar was a big rally to the upside, so the weekly candle should be showing bullish again. So the dollar's not done. If this pattern is correct, then yeah, we can retest. We can retest the highs here in the dollar, right? I still think the dollar has the ability to come back into this little window here as well, 108 to 110. If we and look, this would be a great spot. I mean, let me drag a fib here for a second, and I know it's almost 10 o'clock. And we're going to go here in a moment, but if I take a fib from this high to this low, I mean, technically speaking, this would be pretty perfect to have a 618 retracement right here and a 50 retracement right here, and see that becomes the top. This would be like one of the best looking swings in the market, where we have this high to low, and then the market comes all the way back up here in a really ridiculous fashion. But where does it end up forming resistance? Right in here. And then we look for some structure to see if this breaks structure and starts to head back lower. I mean, look, there's a lot of money to be made if we get a move like that. If the dollar drops, we can absolutely position for that in Forex trading. Yeah? All right. Let's see here. Been doing some good futures prop accounts, thinking extending the Forex side. Um, I mean, there's so many of them. I don't know. Um, Forex prop companies. Ask the community who's watching. We got 25, 30 people watching live. Usually like 250 to 300 people watching. I mean, a comment would be who's using prop accounts right now. I know through market traders they use a prop firm. I think it is Place a Trade. Place a Trade is one that we use. We have a big partnership with them. I know the team at A1 Trading, they have a firm they use with prop accounts as well. So I can find out. But just make sure it's not a ridiculous price to get started. I think that if you get started with like a $10,000 balance or a $20,000 balance, that at least gives you a fighting chance as far as like trade sizes and at least making it worth your while to make your whatever it is, your 5% threshold, and then move up tiers and maybe 7.5% threshold, whatever it is. So I think if you can start at least at 10K, that's good. I think the 5K is a tough one. It's if you can trade units versus micro lots, I think that's a little bit easier. But when you're having to trade micro lots, I think that I'd rather have a 10K account so the risk can be very, very small. If you've got and also drawdown wise, I'd like drawdowns to at least be like 8 to 10%. If you have single digit drawdowns like 5% or less, then that's a very difficult prop account. So the more grace period, the more grace they give you, the more leniency they give you, like 8, 10, 15%. That's at least drawdowns that are workable and realistic. I mean, because look, a risk adjusted return is essentially you're gonna have to take almost twice the risk to make your reward. So if you have a 10% drawdown, you can carve out 15 to 20% gains. But that's usually the way the market works is you've got to be able to take almost double the risk in order to get that return. Okay. So anyway, all right. I know I did some chat in there, but look, there's a lot of stuff going on. Okay, and that is why we're here. That is why we're trading together. That's why I'm trying to build this community, whether it's in YouTube or Discord or all my trading rooms or my classes. I'm just trying to help traders be successful. I'm in the markets just like you, and we'll figure it out. I think the most important thing is that there are no guarantees. There's risk everywhere. So be diversified, have protection, trade small, and our goal is to survive. There's going to be some wild and crazy stuff, and the year's not done. So who knows? The market might throw some crazy surprises at us, and we need to be ready. Okay? So we will figure it all out. All right, so it's just after 10 o'clock. I'm going to wrap it up here for today's session. Happy Friday the 13th. Enjoy the weekend. We'll be back on Monday for a weekly outlook. This week's been a pretty solid week in Forex, pretty solid week in stocks and options. Still watching for the day. Let's make sure we stay above 432, hopefully, in the SPY. We're going to switch over to equities on demand. I might take partial profits on it today just to get it over with. The 432 by 431, the 432 by 430, and then we have some credit spreads out to next week and also the 27th. So we'll take a look. Just seeing a little bit of rejection at that 436 handle, a gap fill maybe at 434. To the downside, the magnet would be 431, which is just below yesterday's low, and 430 is my big contract level on the day. But I'm not seeing, in fact, if I'm looking at real current positions right now, liquidity pockets, the biggest move is up towards 440. So the bulls should have the bigger magnet on the day. Option volume sentiments favoring the call side. We might just stay kind of sideways between this 434 and 435, 436 range. But I'm going to see if the bulls can kind of keep it intact for the week. Okay. All right. I'll let you go. Looking for the chat right here. So happy Friday. I'll let you go. We'll wrap it up there. Great trading this week. Thanks for being here. And we'll be back on Monday at 9:30 a.m. Eastern Time. Okay. Wrap it up there. Equities on demand. As soon as I jump in the trading room, and I'll see you in just a minute. All right, everybody. Thanks a lot. Have a great weekend. See you. Bye.